Good afternoon and a warm welcome to Decision Time. I'm Juliana Tattlebaum and we are just minutes away from the Bank of England's rate decision. Traders are all but certain rates will stay on hold today, with attention focused on the central bank's decision on the pace of quantitative tightening. For the past 3 years, the Bank of England has reduced its bond holdings by £100 billion per year. Economists polled by Reuters now see that pace slowing to an average of £67.5 billion, while an official Bank of England poll showed expectations for a fall to £72 billion. So roughly £70 billion there or thereabouts is the expectation. In terms of markets and where we stand right now, here's a look for you at the gilt yields, the gilt curve. You've got the 10-year gilt yield trading right around 4.63%. You've got the 30-year gilt trading around 5.434%. So those are the levels to watch. We are higher across the curve this morning. Obviously, in addition to bracing for today's Bank of England decision, investors in the bond market also reacting to the Federal Reserve decision that came through yesterday. Let's welcome Daniel Mahoney, UK economist at Handelsbanken, to the program. Daniel, good morning, or good afternoon. Depending on where in the world you're watching. We are about a minute away from the decision. What are you expecting from the MPC today?
Yeah, as you were summarising there, it's going to be a freeze in rates, and you just need to look at the inflation prints to see that. So we're going to get to 4% very shortly. We'll be north of 3.5% by the end of the calendar year, and we'll only actually be south of 3% by the middle of next year. So you can see there is that inflation persistence worry that means we'll see a freeze in rates. Really what everyone's looking for, as you say, is that QT runoff. So how much is the runoff going to slow down by? If there's any deviation from that, there will be movements in the gilt market, so something certain to keep an eye out for. And will there be any other announcements about the long-dated gilts within the APF?
And in terms of the language, Deutsche Bank came out saying that they think we could actually see the language around a gradual and careful approach remaining appropriate to be removed. Any chance of that in your view?
So it's possible because of that inflation persistence worry, but I would say, personally, I don't think enough has changed since the last meeting to justify a change in language, but we will see whether that changes.
So we are now just moments away from the decision. A hold is expected. And as a reminder, last time the MPC voted 5-4 to cut rates by 25 basis points to 4%. So here we go. The decision has come through. The bank has held rates steady at 4%. So that was the expectation. Now, in terms of the detail, the vote split, always interesting when it comes to the MPC. The MPC voted by a majority of 7-2 to maintain rates. That is the split that was expected by the market. In terms of the dissenters, you've got Dingra and Taylor voting to cut rates by 0.25%. In terms of the quantitative tightening, policymakers have voted 7-2 to slow quantitative tightening to 70 billion sterling a year from 100 billion. That was pretty much bang in line with consensus. As a reminder, Reuters poll was looking at 67.5 billion. Some estimates were slightly higher. So they have gone ahead and announced they will slow the pace of QT to 70 billion sterling a year. Now, in terms of that vote, we've got Hugh Pill voting to maintain the pace of QT at 100 billion sterling. We also had a dissent from Mann, who voted to slow the pace of QT to 62 billion sterling. So again, 7-2 vote to slow the pace to 70, a dissent on either side of that. Now, in terms of the qualitative commentary coming through from the policy statement, the phrase "a gradual and careful approach to the further withdrawal of monetary policy restraint remains appropriate," that phrasing was kept in the statement. Also kept in the statement, the phrasing around monetary policy not being on a preset course. Now, in terms of inflation, the BOE saying UK inflation CPI forecast to peak at 4% in September. That was the same forecast that we had last time round. The staff forecasting Q3 GDP to increase by around 0.4%. That is slightly higher than the 0.3% that was forecast back in August. So a slight upgrade there to the growth forecast here. In terms of tariffs, the BOE commenting that the impact of U.S. tariff rates on the world economy could be slower, not smaller, but slower than previously thought. That's really interesting, a comment around the timing of the tariff impact here. Now, in terms of market reaction, you're looking at the banks on your screen now. Not a huge amount of movement in the UK banks. In terms of the FTSE 100, we're pretty steady overall. As investors digest this news. So just to recap before we get back to Daniel, who's with us here from Handelsbanken, the Bank of England has announced a slowing of the pace of QE to 70 billion pounds sterling per year as expected, and they have held rates unchanged. Well, Daniel, it doesn't seem like a huge amount of surprise here.
Not a huge amount of surprise, and the reason why I thought they would keep that language is I think you would need to see further weakening in the labour market to justify a change. And I don't. So obviously it depends which metric you look at. So if you look at the payrolls, for example, they do sort of show a bit of a bleak picture. But if you look at other metrics like the unemployment rate, for example, that's not going up that much. So I think that's why you've seen that language stay there. Now, obviously, everyone was looking at the QT figure, and as you say, it's come in as expected. Now, it's interesting that there was some dissent on that. Now, in terms of how the Bank of England decide these things, they are very clear that their focus is on the functioning of the market. Now, I think you can be quite flexible in the interpretation of that. But I think the fact that they have now slowed the runoff is a kind of acceptance that there is a bit of an impact on the long end of the market. So Catherine Mann has obviously been very clear about the asymmetric impact of monetary policy at the moment. So base rate coming down, lowering yields at the sort of shorter end, and QT potentially raising yields at the longer end. So I think that, I think that argument has effectively been accepted by the Bank of England by that decision.
Now, in terms of Mann, you mentioned that the reasoning that we've heard before, just to remind viewers, that Mann voted to slow the pace of QT even more to 62 billion. So that is bang in line with what you just cited. Want to also bring you a comment from Governor Bailey on the decision around QT. He said the new QT target means the MPC can continue to reduce the size of its balance sheet while continuing to minimize the impact on the gilt market. So clearly a nod to the impact that the gilt sales have been having on the long end of the curve. And I have to think from a fiscal perspective with the November budget coming up, this is a bit of a bone thrown to Rachel Reeves, is it not?
It's a little bit, but it depends how you look at it, because obviously she has this fiscal target by 29-30, and on some metrics this could actually potentially make it more difficult. So in terms of her black hole that she's got to fill, we're probably looking between 20 and 25 billion. I wouldn't say this decision changes that much on that front, but obviously the reason why that's going to happen is we'll probably see a downgrade in growth. Also, obviously, there have been some policy sort of decision changes that have very much affected her headroom, so obviously the rowback on welfare reform. And in terms of what's happened in the gilt market, that probably won't help her as well. I would say the impact of that might be limited, though, because most of the movements since the last OBR report have been in the long end, particularly the 30-year. If you look at the 10-year, the 2-year and the 5-year, it's not that different. So as I say, I think her headroom really is going to reduce because of the OBR downgrading growth and also because of policy changes that the government have made.
In terms of growth, we have a small revision here to the forecast around growth. Staff forecasting Q3 GDP to increase by around 0.4% quarter on quarter. The August forecast was for 0.3%. It's obviously marginal here, and I guess shouldn't be a huge surprise given a lot of the recent data has been better than expected, including the latest growth figures. What should we read into that, do you think?
Well, I think if we go back to the beginning of this year, I think the forecast was very much for suppressed growth. Now, I don't think we're going to get back to trend rate of growth. Obviously, there are disagreements about exactly what that is. But I would suggest that we're probably going to be around sort of 1.2, 1.3% on an annualized basis in 2025. So again, I think it just makes the argument for the hawks slightly more stronger. And I really think that's probably the main takeaway there.
So what does that tell us about the policy path from here? Given that growth has been a little bit stronger, as you said, that's something that the hawks can lean on. What are you expecting in terms of the rate path over the coming quarters?
So the fact that the gradual and careful approach phrase remains very much indicates the cutting cycle has not concluded yet. So that is something we thought before. We will certainly think that now. Now, in terms of what we're estimating, we probably think 3 further cuts in this cycle, but for them to happen over a very long period. So specifically December this year, next year I think it's June, and then the following year probably February. So a really kind of sort of gradual cutting cycle continuing. Now that's a tiny bit more dovish than markets, but only very, very minusculely. So I think markets think another 2 cuts, so we really are within the margin of error here.
Clearly, the Bank of England today was a focus for markets, especially this QT decision, but arguably the fiscal side of things is more important at this stage, and we're all waiting for that November 26th budget announcement from Rachel Reeves. How are you thinking about it from an economic perspective? How do you assess the options that are on the table, and how would you describe the overall UK economy here as we head into the budget?
Yeah, so I think the budget just adds to the downside risks to growth. And I think particularly because spending restraint is unlikely. Obviously, if we go back earlier this year, the government was trying to make some welfare reforms to reduce the increase in spending on PIP, for example, the personal independence payment. They couldn't get that through their own backbenchers. So obviously, that's a fiscal gap they have to fill. So they're probably going to go on the taxation side now. I think what probably will be quite unhelpful in the run-up to late November is there's going to be a huge amount of speculation about what will be in that budget. So, real wide range of potential policies. Now, there are some that I think we can be pretty confident will happen. So, for example, a freezing of the income tax thresholds. That's a kind of stealth tax that they'll probably go for. It's not a strict breach of the manifesto, but obviously that will not be enough to fill a sort of 25 billion pound black hole. So potentially we're going to see some taxation measures that could be suppressing growth. There's
so much debate and a lot of focus, and the FT this morning, their most read article was around how wealth taxes don't work. And we're sort of joking around on Squawk Box. The FT is really playing into their audience. A lot of readers of the FT will also argue that wealth taxes are not the way to go. But what do you think is the reaction if we do see Rachel Reeves go down that path?
Well, the international evidence, as you say, is wherever they've been tried, they haven't worked. So I don't think she'll go for an overt wealth tax. What she might do is, for example, if you look at the council tax banding system in this country, there are quite a lot of critiques about it. You could see potentially another council tax band and then hypothecating the revenue to government, which is a sort of wealth tax, but potentially not one that would be hugely economically damaging. But obviously it won't be particularly popular for those who are affected. But I think, frankly, where they'll probably have to go for is they might have to go for landlords. There's been some talk about putting national insurance contributions onto landlords. The banks may be hit. Yeah. I don't think they'll target the interest paid on reserves because that could affect monetary policy transmission. What they might do is increase the surcharge potentially. But again, there are consequences to this, and this is all serving to sort of potentially suppress the growth outlook in the future.
Well, one of the upsides or the potential upsides to the growth outlook is all the investment that has been promised to come into the UK just in the last couple of days with President Trump's second state visit. Really extraordinary numbers, billions pledged by these U.S. companies. And Keir Starmer obviously trying to tout this as a growth driver for the UK economy. As the announcements have rolled through over the last few days, what's been your reaction? To what extent is this investment actually going to translate to stronger growth and actually going to lead to job creation here?
So look, it's obviously a good news story. Now, whether it will move the dial or not on the overall outlook, that remains to be seen. Now, I'd say two comments on it, which is a lot of the investment is in AI. Now, that is a sector where we could actually get the benefits. So if you look at the kind of industries that are set to benefit from AI, the UK is quite strong in those. So the UK obviously has a productivity problem. If we can harness that with investment from the US and with investment from elsewhere, that is obviously going to be a good growth story. But there are other issues with the UK economy that are unearthed by this. So, for example, data centres are very energy intensive, and the UK has some of the highest energy costs in the developed world. So it's a good news story, but it's also highlighting some sort of structural problems with the UK economy.
Translate all of this into the pound for us, if you will. We have seen sterling rally versus the dollar over the last month pretty strongly. I think it's currently sitting around 136.45, but there we are, 136.29 now. We have come off a little bit. We were up about 15 basis points before the decision has come through, and now sterling has come off a little bit here. What's your take on sterling and where we go from here into year end?
Yes, so against the dollar, we think it's more of a dollar story what's going to happen. So we think that sterling might appreciate somewhat, but more because of what's happening in the US. So there's obviously concerns around inflation impact on tariffs, also concerns about Federal Reserve independence, whether that affects the kind of inflation picture there. So that's very much on that side. Against the euro, again, we think maybe slight appreciation by the pound, but more because of interest rate differentials. So that's sort of our high-level view on sterling.
Daniel, thank you so much for being with us for the decision. Daniel Mahoney, UK economist at Handelsbanken, helping us digest the news out of the Bank of England. Coming up on Decision Time, we're going to speak to the Norges Bank Governor, Ida Woldenbacke, after the central bank cuts rates, but flagged a slower pace of easing ahead. Don't miss that conversation next. Welcome back to Decision Time. Well, I'm going to interrupt the central bank news flow with a huge announcement out of Nvidia and Intel. Intel shares up 33% in extended trade stateside. This because Nvidia has announced it will invest $5 billion in Intel, throwing itself behind the struggling U.S. chip firm that, of course, the U.S. government has also taken an interest in. Here's what we know about the pact. They are going to jointly develop PC and data center chips. The plan includes plans to jointly develop these chips. It represents a potential risk to TSMC. TSMC currently manufactures NVIDIA's flagship processors. So this has potentially major implications for TSMC. In terms of the detail here, we are looking at jointly developing multiple generations of customer data center PC projects, the products to accelerate applications, workloads across hyperscale, enterprise, consumer markets. We are also seeing a reaction to the downside in AMD. AMD shares down about 3%, given that AMD is a peer to Intel, and this is obviously a major boost to Intel. In terms of the detail here, again, Nvidia said in a statement it will pay $23.28 per share for Intel common stock, a price slightly below the $24.90 price that Intel shares closed at on Wednesday. But for context, that's higher than the $20.47 per share that the U.S. government paid for their 10% stake that they took in Intel last month. So I think the critical news here, this comes after the U.S. government took a 10% stake in Intel. Now we have Nvidia investing $5 billion. This is a company that has become a laggard as peers have powered ahead. So the fate of Nvidia, the fate of Intel dramatically changing now is what investors are telling you with the reaction here. In terms of the peer reaction, I mentioned AMD shares. They're 3% lower pre-market. U.S. listed shares of TSMC are down 1.5% pre-market. So this deal has the potential to truly change the landscape around the build-out of these PCs and chip infrastructure and change the fate of what was an ailing company. So this is huge news for Nvidia and, more importantly, for Intel. The stock up more than 30% right now. Now, back to central bank news. This is decision time after all. The Norges Bank has announced a 25 basis point rate cut, its second reduction in 3 months. Policymakers say the central bank will not ease rates in the future as much as it had projected in June, warning that inflation may remain high for slightly longer than it had anticipated. We are fortunate to have the governor of Norges Bank here with us now, Ida Woldenbach. Ida, thank you so much for being with us. The committee said today that you considered keeping the policy rate unchanged at this meeting, but ultimately concluded that a rate cut was appropriate. What tipped you over the edge?
Well, first, we had received information since we last produced our forecasts in June that activity in the economy has been slightly higher than we projected. Moreover, there are indications that inflation will remain elevated for somewhat longer. Now, this suggested a somewhat higher rate path going forward than indicated previously. And in light of that, it was natural for the committee to consider the alternative of keeping the policy rate unchanged. Nevertheless, the outlook still suggests that a cautious easing of monetary policy ahead is appropriate. We have seen imported inflation coming down significantly. Wage growth is still high, but there are clear signs that it is coming down, and we expect that will contribute to dampening domestic inflation going forward. So all in all, lowering the interest rate was appropriate and paves the way for inflation returning to target without restraining the economy more than necessary.
Let me ask you specifically about the line around the committee judging that a somewhat higher policy rate will likely be needed in the year ahead compared with the outlook in June. Can you just hone in for us on what changed between June and now that's made you adjust your guidance?
Well, we've seen that the activity in the Norwegian economy has picked up, and more than we had expected. Moreover, there are signs that firms have a little more difficulty recruiting the labor they need. So our assessment is that there's a little less spare capacity in the economy now than we projected in June. Moreover, if we look at the underlying inflation pressures, they are also judged to be somewhat higher than previously. And taken together, this suggests that inflation will remain higher for somewhat longer and calling for somewhat tighter monetary policy.
And you anticipate that one rate cut per year in the coming 3 years is going to be the appropriate pace. Why is that the right pace?
Now, obviously, this is an interest rate forecast, and there is uncertainty around that interest rate forecast. That is our current assessment of what best will deliver the goals that we're trying to achieve. The message is that there are prospects for a very cautious normalization of the policy rate, and that the policy rate at the end of the forecast horizon will be significantly higher than, say, in the decade prior to the pandemic.
What could change that policy path? What could lead you to adjust your view that one rate cut per year for the next 3 years is the appropriate path?
Now, obviously, everything that will affect the outlook for the Norwegian economy could have an impact on the interest rate path. We point in particular to the uncertainty still surrounding the global outlook, although the uncertainty around tariff policy seems to have been reduced somewhat since June. On the other hand, there are still uncertainties surrounding wage growth in the Norwegian economy and how that will affect domestic inflation going forward. But yes, there is uncertainty about the outlook, and therefore also uncertainty about the interest rate outlook.
You know, on the point around the global factors, we just heard from the Bank of England as well just 20 minutes or so ago, and they noted that the impact of U.S. tariffs on the UK economy are likely to be slower than previously anticipated, not necessarily smaller, but slower. Is that your expectation as well?
I think we do expect tariffs to have a dampening effect on global growth. But if you look at developments so far this year, growth among our trading partners has in fact been somewhat higher than we have projected, consistent with what you are saying. We do not expect tariffs to have a very significant impact on growth in the Norwegian economy in the near term.
What are the biggest risks to growth in the Norwegian economy in 2025, 2026? Because in 2025, so far, Norwegian economic growth has been stronger than previously projected.
Yes, economic growth has been stronger. We're now seeing a shift in the composition of demand compared to what we've seen over the past few years. After a period of very sharp declines in residential investments and also weak development in business investment more generally and household consumption, we now see that these demand components are picking up, and we expect them to continue to pick up in the years ahead. On the other hand, in the years that we have behind us, we have had very strong growth in petroleum investment. We now expect that to start to decline, and we also expect export growth to slow somewhat going forward.
We are in the midst of a busy week for central bank action with the Federal Reserve. The closely watched Federal Reserve decision coming through yesterday. They decided to cut interest rates by 25 basis points, and the widespread expectation is that more cuts are coming. How does that influence monetary policy decision-making around the world, given the outsized influence of U.S. rates on broader bond markets?
Now, obviously, developments in the U.S. economy and therefore also developments in U.S. monetary policy will affect global financial conditions and could also have an impact on the outlook for the Norwegian economy. Partly also because it has a potential effect on the exchange rate. But there's no mechanical relationship between monetary policy in the US and in Norway. We will continue to set policy rates according to the outlook for the Norwegian economy.
Governor, appreciate you taking the questions on what was certainly an interesting day for watchers of the Norges Bank. I know the decision was a close call for you, and it was a close call among those analysts who closely watch the policy making. So appreciate the time. Ida Woldenbach, Governor of Norges Bank. Well, that is it for Decision Time. We'll hand you back to our colleagues stateside.